ಬಟ್ ಇದು ನೆಟ್ ಎಲ್ಲ ಕನೆಕ್ಟ್ ಆಗಿದೆಯಲ್ಲ? ಆಗಿದೆಯಲ್ಲ? ಆ ಒಂದು ಸ್ಟ್ಯಾಂಡ್ ಅಂದ್ರೆ ಒಂದು ಕೊಟ್ಬಿಡಿ ಸರ್ ಹಿಂಗೆ. Can we go live? Live. Okay. Live. Yes, people. Good morning, everyone. I hope you guys are able to see here. So I asked you that if you guys want numerical, and a lot of you had messaged me, can we also revise the numericals that we had solved inside the class as well? Hey, then what did we do inside the class, Dathan? Sir, please, sir, revise that also, sir. Whatever we had seen inside the class also revise, sir. Please, sir. Okay, so I thought we'll revise the classroom, whatever we had seen the numericals also, and certain other numericals as well. So it's a quick revision where you are going wrong. So numericals are very important part of your capital markets. I've always been telling you, you guys can expect at least a question of around 3 to 4 questions will be there on numericals. And I've told you also what is the place where you can expect the numericals from. If you guys have not noted that, again I'm telling you, the numericals will come from options, futures, buyback, IPO, delisting, mutual funds, sweat equity. These are the important points. Yes, what are the points I said? Options, futures, buyback, delisting, IPO, mutual funds, and you may also get, now that they have added in what is that? I told you in amendment also. I don't think that will be coming for you in the amendment of delisting only, right? The new formula and all we had written. Was it in delisting only? One amendment in the Bardidwala. We written one amendment, right? If I'm not wrong, it was in delisting only. Yes. So, but for this attempt, I'm very sure that they will not ask for from that particular part. But yes, so these are the places where you can expect a question. Sweat equity, buyback also, no and go. Yes. So before I start with the numerical part, first tell me how's your preparations going? Good, everything is good, Not everything, sir, but something is good. Then what else we can say? You know why this month is called May? You know why this month is called May? Because this decides your CS results, it seems. Based upon May month, it decides you may pass, you may fail, you may have a neutral attempt, you may skip your attempt. That's why this attempt is called as May. Adike ee month they call it as May. Everything may happen, and if you are in Bangalore, it may rain, it may be sunny, it may be bachal mane, everything can happen. One day inge, one day ange. That's why we named this month as May. So accordingly, I think your month is also May. I hope your preparations are on track. There is capital market amendments also. It is recorded for people who are just watching it on YouTube live. I've updated the capital market amendments. What is it? Amendments also. I hope you guys watched it. I've done marathon also. Now we are doing numerical also. In anything else you ask me, I'll come and hit you. Clear? So I thought this is one thing where at the end of the day, at least whatever we have seen, let us quickly revise. So what I have done is, in your new syllabus, whatever numericals have been asked till date, we hardly have 4 attempts. I've taken all that, and because it is 4, we'll get maximum 12 questions, which is not sufficient. And I've taken some other 8 or 10 questions from other places. I think we have around 23, 24 numericals. 15. You can expect around 15 marks from numericals. Yeah. And I'll tell you, if the numericals are coming, generally it will come in question 1. Question 1 will always be mandatory. If anything comes in question 1 is mandatory. We know that. So you'll not have an option. Few people had messaged me also, sir, if at all there is numericals, can we have it as an option? If there is 4A, I will write 4A. Remember, that and all will work if at all you are getting it in optional. If it is getting in a compulsory based question, macha hoge. Okay, na, first thing. Second thing I'm telling you, people, if numericals work, I'm telling you, you guys solve this and go. I'm telling you, 15 marks getting in theory is very difficult. Out of out you will not get. I'm telling you, we will see some questions. They have given children questions. You will pakka get. You will easily be able to solve. That and all I'm saying, you have to go for numerical only. If your numerical is right, trust me, 65 is on the dot. You will pakka get it. Reading it? Okay, with that we will start. Matthew ji, kaise ho aap? Sab badhiya? Okay. Now people, banto, point banto. Sir, will we get this material? Band in maamuli, shuru maadi, start Indian. What else is sir? Yeah, we'll start this. Okay. I'll share it to you people. Of course, I did it for you guys only, so I'll definitely share it with you. After the class, I'll tell the team to upload it as a link in the description or something. You guys can download. So I'll definitely share it with you. So let us start. As I told you, whatever. That's what day coming. Wait. So sir, can we revise the numerical seen in the class also? We'll do that also. Okay, now. Because I know you have not revised. Good to know that. Okay. Now people, the first question people. Suppose B company limited. In numericals, open your eyes and see the question, because there can be 2 to 3 questions inside the question. We will ignore to see that. So always open your eyes and solve the questions. Suppose B company limited issues bonds with following terms. A company is issuing bond with terms. Issue price of the bond is 2000 rupees. How do you solve it? First, write down all the facts so that you need not have to go through the facts again, and make sure your numericals are presented in a good way. So my issue price is 2000. Coupon rate. What do you mean by coupon rate? What do you mean by coupon rate? Coupon rate means what? Interest rate. So coupon rate is called as interest rate. Maturity period is how much? So redemption time. Redemption period is 2 years. So I have this data now. Convertible into, so it is also convertible, it seems. It's a convertible bond. Okay. Convertible into equity shares at 100 rupees per share. So what is that they are telling you? Whenever it's a bond, right? The bond has 2 options. One is redemption. After 2 years, you will get back your complete money. Second option is people, you have an option to convert it into equity. They are telling you when the shares gets converted, the price at which it gets converted will be, one equity share will be 100 rupees. So you will get one equity at 100 rupees. So when you are writing also, try to classify your entire points like this. You will get everything as a data. Again and again, you need not read it. Okay, Y has subscribed 5 bonds. Y has subscribed, he has 5 bonds it seems, and made an investment of 10,000 rupees. Of course, no, issue price is 2000. 5 bonds he has purchased at the rate of 2000 rupees. So how much he has invested? He has invested 10,000. On maturity date, investor will have an option to either claim full redemption amount or convert the bond into equity at 100 rupees per share. So at the end of 2 years, I have an option to either convert it into equity or I can ask my complete money back. So I have an option, it seems. The quoted share price on maturity date is rupees 150. Meaning what? Whatever is the share price, the equity share price in the market currently is 150 rupees. Current market price. Market price is 150 rupees. If he goes for conversion, how many shares I will get? Question number 1. Will it be fair enough if he opts for redemption value? Question number 2. Calculate which option is best suitable to Y. Question number 3. So I will classify my question into 3 parts. I have 3 things. They're asking how many shares will I get on the date of redemption? How many equity I will get if I'm opting for conversion? Next one, if at all I'm taking redemption, how much money will I get? Option question 3, whether I should choose redemption or I should choose conversion. A good question only, right? So in this board they're telling you, how much did I invest, people? I invested 10,000. Now first of all, let us imagine option 1. Now let us try to option question 1. What am I trying to calculate? Question 1 is, people, if at all he is choosing redemption, how much money will I get? I have invested 10,000 rupees. If it's a coupon is always paid to you at the end of your tenure, FD. When you are investing 1 lakh, you will get 1,20,000. That's how coupons, that's how bonds work. Now I have invested 10,000 rupees. This has a coupon rate of 2% per year. So 10,000 into 2%, how much is it? 10% is 1,000, 2% is 200. So per year I am entitled to 400 rupees as 200 rupees as interest. Now I am entitled for 2 years. So how much will be my value at the end of redemption? 10,400. This is my redemption value. Agreed? Yes, sir. Now question number 2. What is the second question they're asking me? They're asking me, if he goes for conversion, how many shares I will get? How many he will get? What is the conversion thing they have mentioned? They have mentioned that I'm getting 1 equity share on the date of conversion. I'm getting it at the rate of 100 rupees per share. What is the total money I have at the date of maturity? 10,400 divided by what is the price at which I'm getting each equity share? I'm getting it at 100. Totally, can I say 104 shares? So how many shares I'm going to get on the date of conversion? I'm going to get 104 shares. I hope you're understanding. They online or YouTube. I hope you're understanding. So 104 shares. Now I have question number 3. What is question number 3? They're asking me whether redemption is good or conversion is good. What is good? How will you know? What is good? What will you suggest?
Option. Market gal 150 rupees ಇದೆ.
So now I have totally 104 shares. Correct? If I take complete redemption, I'm going to get 10,400 rupees. But if I go for conversion, I will get 104 shares. In the market, the shares are being traded at 150 rupees. So can you do 104 into 150? 15,600. So if you opt for conversion, you are definitely getting benefited. So what will you advise? We will advise people that you have to go for conversion because the redemption value will get us more. This is how you guys have to present numericals. Same play, don't write anything and all. Clear? Now that's what I'm saying. Remember, capital market complete questions will be very, very, very easy. Very, very easy. And see, this question has been asked twice. Same question. See, Aruna Steel Limited issued bonds with the following terms. Issue price of the bond is 1,000 rupees. Coupon rate is 3%. Maturity is 5 years. Convertible into equity at 500 per share. Same data we got. Okay. Ivan had purchased 20 bonds. He has purchased 20 bonds. So how much he has invested? 1,000 into 20. 20,000 he has invested. At the time of maturity, the market price of equity share is 400. So technically what will happen now? It is opposite. You're getting conversion at 500. Market it is 400. So what is beneficial for you? Redemption is beneficial for you and not conversion. I hope this is clear. Yes, same terminology. Nothing will change. 2 times I have asked this. Online or YouTube? Are we good to go to the next question? Here okay. Third one. Akshay buys 500 shares of PQR Limited at 210 rupees per share on stock exchange platform. Akshay is buying PQR Limited shares. How many shares? 500 shares is purchasing. At how much? At 210 rupees per share. In order to hedge the position, he sells. People, this is buy. In order to hedge a position, he sells. So he is selling also. Correct? What he is doing? He sells futures of PQR Limited at 195 shares. So 300 shares at the price of 195 per share. Due to fall in the share and future price by 5% and 3% respectively on the next day, Akshay closes his position by counter transaction. Find out his profit or loss. I hope you are understanding the question. So day 1, what did he do? He purchased one share, 500 shares at 210 rupees per share. On the same day, he has done hedging, it seems. What do you mean by hedging? Hedging means, people, I am mitigating my risk, reducing my risk. How will I reduce my risk? One I have done buy, one I have done sell. So by this I am mitigating risk. Correct? So if share prices goes up, it is beneficial for me if I have purchased. When I have sold, it is not beneficial for you. So hedging means it is always happening opposite. So now what are they telling you? He has purchased also, he has sold also. He has purchased 500 shares, he has taken one more position, he has done sell. So it's a different, don't combine these two. They are two different contracts. In options, I hope you are understanding this. So he has done two different contracts. Now they are asking you, after some date, on the next day, the market has fallen, it seems. The future price, due to fall in the share and future price by 5% and 3% respectively on next day, Akshay closes his position. What do you mean by that? He has purchased, no. He has sold it. He has sold, no. He has purchased it. Meaning you are doing opposite of it. So you are closing your positions. They are asking you by counter transaction, find out what is the profit or loss he has incurred. How will you do? What will you do? So first one, my data, what? The buy transaction, 500 shares, I have purchased it at 210 rupees. Tell me what is it? 500 into 210? 1,05,000 rupees. Correct? Now he has purchased it. Now he is doing a counter transaction. What do you mean by that? He is selling it. At what price? They are telling you the share price has fallen by 5%. Now people, 500 multiplied by 210 minus 5%. How much is 210 minus 5%? 210 minus 5%. The share price has fallen by 5%. 199.5 multiplied by 500. How much? 99,750. So what do you mean by that? I purchased at 1,05,000. I am selling it at 99,750. Is it a profit or loss to me? Loss. So I will write loss here. How much is the loss? 1,05,000 minus 99,750. How much? 5,250 is my loss here. Is this clear? Now look at the next one. You have done a sell of 300 shares at the price of how much? 195. Correct? 195. How much is it? 58,500. Now tomorrow what is happening? 300 multiplied by 195 is falling by how much percentage? It is falling by 3%. Do 195 minus 3%. How much? 1?
89.15.
189.15, correct? Do 300 into 189.15. 56 745. So what do you mean by that? I sold at this price, I purchased at this price. So I'm getting a benefit there. Do how much? 58 500 minus 56 745. How much? 1755. So what is my net loss or net profit? I have a loss of 5250. I have a profit of 1755. Do my net. What is more? Loss is more or profit is more? Loss is more. So my net loss will be how much? Write down 5250 minus 1755. How much? 3,495. Correct? If you guys have given me the numbers properly.
Sir, doubt. Sir, numerical solve ಮಾಡ್ತೀನಿ IarivuPro solve ಮಾಡೋದಲ್ಲ ಅಲ್ಲಿ ಕೆಳಗಡೆ ಇವಾಗ ಸಾಲ್ವ್ ಮಾಡೋದಲ್ಲ ಸರ್ ಸರ್ ಅಲ್ಲಿ ಇವಾಗ ಸೆಲ್ ಮಾಡಿದ್ರೆ ತಾನೆ ಅದು ಲಾಸ್ ಸೆಲ್ ಮಾಡೋದಕ್ಕೆ ಕಮ್ಮಿ ಪ್ರೈಸ್ ಅಲ್ಲಿ ಸೆಲ್ ಮಾಡಿದ್ರೆ ಅದು ಲಾಸ್ ಅಲ್ಲ ಸರ್ ಸೆಲ್ ಮಾಡಿದಾಗ 58500
sell ಮಾಡಿದ 58500 counter transaction means what? Opposite. You are buying it at lesser price. So you can imagine like this. Morning I came to you, I said I will give you my mobile for 58,000. Morning I came and said, now I don't have mobile with me. What will I do? Now I'll come to you, I'll come to here, I'll say I'll sell my mobile for 58,000. I will go outside, I will buy the phone from B for 56,000. I am selling it to you for 58, I am buying it for 56. Counter means what? Whatever you did in the morning, you need to do the opposite of it. So whether will it be profit or beneficial? Answer is yes. Understood? That's the difference between buying and selling, selling and buying. If you purchased first, the share price has to go up for you to be beneficial. If you have sold first, the share price has to come down for you to be beneficial. Getting it? Online, I hope you are able to get it. Yes, sir. Yes or no? This is the number you guys told. We are correct. I hope you are able to follow. Fourth question. AB Tech Solution Limited, a technology company incorporated in India, is planning to make an IPO and gets its share listed on stock exchanges. So they're going for an IPO, it seems. The post-issue capital of the company calculated at the offer price is estimated to be 2,200 crore. That's the price. They're going for an IPO post-issue capital. So what does post-issue capital means? My existing capital plus my proposed capital. Existing plus new shares will give me post-issue capital. So my post-issue capital is going to be 2,200 crores. The company proposes to offer 12% of its equity shares to the public in IPO. 12% of 2,200 crore, how much? Definitely less than 250 crore. 2,200 crore into 12%, how much? 2,200 to 12%, how much?
2200
264 crore. So how much they are issuing it to the public? 264 crore. Correct? The company proposes to offer 12%. The company contends that since the post-issue capital is more than 1,600 crore, it need not offer 25% to the public. As a company secretary, you are required to examine whether AB Tech Solution Limited proposal to offer only 12% equity shares to the public is in compliance with the Act. Next one, state the minimum percentage of public shareholding required in this case. Advise on the time period available to the company for increasing its public shareholding to 25%. Tell me, whether 264 crore, is it valid or invalid? When they are going for an IPO, they are proposing to issue 264 crore worth of shares to the public. Is it valid, invalid? Valid only, no? Why? That we don't know. Valid only, sir. When the issue size is up to 1,600 crore, when the issue size is more than 1,600 up to 4,000 crore, it will come in more than 1,600 to 4,000. Correct? Then you need to issue at least 400 crore worth shares to the public. 400 crore worth shares. How much the company is issuing? 264 crore. So are they satisfying the limit? Answer is no. My first question I will be writing. Because the 400 crore mark is not met, the company is not in compliance with public offer. For the company to be in compliance, because their IPO size is more than 1600 up to 4000 crore, the minimum offer that the company needs to make is 400 crore. That's my option 1. Minimum percentage of public shareholding required. How much is the minimum public shareholding? 400 crore. Next one, what time do you have to increase this number to 25 percentage? Day, online. How much time do you have to increase this particular number to 25 percentage? Now, if you look at it, 400 crore is not 25 percentage. But how much time do you have? Yeah, if you remember our rule 19, you need, how much time do you have? You have 3 years time. Correct? Yen correct. Yeno. Okay, next question. Sun and Moon Limited is a Mumbai-based construction company. The company is listed in National Stock Exchange. The extract of the balance sheet of Sun and Moon Limited is as follows. Equity share capital 10,000 of rupees 25 each. 12% preference share capital 2 lakh shares of rupees 50 each. Series A 10.5 preference share capital again 10 lakh of rupees 100 each. Series B 14% debenture capital 4 lakh of rupees 50 each. What is the maximum equity shares that can be bought back? What is the maximum number of equity shares that can be bought back? What is the maximum equity share capital that can be bought back? What is the maximum number of equity shares that can be bought back? How will you calculate? First, you need to calculate what is the maximum equity share capital that you can buy back. How much?
10 lakh divided by 25. ఎక్కడ one share 25 రూపాయలు.
So they have given you this capital. This 25 rupees each. So what is the total number of shares they have? 40,000 shares they have. Now they are asking you how much equity share capital can be bought back. How much equity shares can be bought back? How will you calculate? What is the maximum buyback you can do? How much buyback you can do maximum? What is the percentage?
10%.
Okay, if you pass board resolution, then it is 10%. If you pass special resolution, 25%.
Other than equity share,
we are written two. One is number of shares. Next one is other securities or value of shares. Remember. So what is the maximum buyback I can do? 25% of paid up capital plus free reserves. That is the maximum buyback you can do. Now see what is your paid up capital. How much is your paid up capital? You have preference share also?
Preference is 2 lakh.
This is also preference only, no? So how much you have? What is the total? 22 lakh, There. What is the total paid up capital? Equity is there, preference is there.
22 lakh.
22 lakh? 22 lakh? Is that total paid up capital? Do you have free reserves and all? They have not given. So what is the maximum capital you can buy back? 22 lakh into 25%? How much is it?
5 lakh 50,000.
5 lakh 50,000 can be bought back.
Can be bought back. Correct, So when they're asking you, remember, how do we connect that point? I think we have one more question also, where we are going to see what is the maximum value you can pay for the buyback. That is more important. So See, one is directly what you will do. Total number of equity shares. What is the total number of equity shares? 40,000. What is the total shares that you can buy back? 40,000 into 25 percentage. So the maximum equity shares I can buy back is 10,000. That is clear, no? Correct, no? First one, what is the question? What is the total number of share capital I can buy back? Equity share capital, how much I can buy back? One is number, one is value. Do not get confused. One is number, one is value. I'll tell you how it is important. Now in the first one, we are deciding what is the value. Okay. Total number of equity shares. For 40,000 share maximum. Okay. 40,000 share, 10,000. Maximum equity share that can be bought back. 10,000 equity shares into 25 rupees per share is 2,50,000. Now how did we come at this?
Sir, the 25 shares the criteria 40,000 to 25% ಆಗ್ತಿದೆ. ಅದಾದ್ಮೇಲೆ per share ಗೆ ಒಂದು share ಗೆ 25 ರೂಪಾಯಿ ಅಂತ ಕೊಟ್ಟಿದ್ದಾರೆ.
Now I'll tell you the third question. I'll only tell you what is the maximum price you can pay for the buyback. You tell me.
Maximum
Price. One is they are telling you people 10,000 shares into price is 25 rupees. So the capital I can buy back is 2,50,000. Children question they have given. The third question I am only giving it to you is what is the maximum price you can pay? With the given data. Of course, we don't have any other data here. Meaning we don't have what is that free reserves. We do not have any of that data. Let us assume we have all the money. So debt equity, all that is taken care. Keeping all that in mind, you tell me what is the maximum price we can pay. How will you get that? So this is where you guys will have to calculate. When you pass a special resolution, you can do two types of buyback. One is people in the number of equity shares. Now we got to know what is the total number of equity shares I can buy back. What is the total number of equity shares I can buy back? 10,000 shares. That is nothing but 40,000 shares into 25 percentage. Okay. What is the total value of shares I can buy back? Money. In number, how much? This is in quantity. In value, how much I can buy back? The formula for that is 25 percentage of total paid up share capital plus free reserves. Correct? Huh? So in this, what is my total paid up share capital? I have equity plus I have preference shares of 10 lakh. How much it was? 10 lakh and one more also was there. No, 2 lakh, 12 lakh. No. So can I say total preference share is 12 lakh? Free reserves we don't have data. Agreed? So what is my total capital? 22 lakh? Agreed? Okay. Now do 25% of 22 lakh. 5,50,000. This is the maximum value of buyback I can do. Hello. Now tell me what is the maximum price you can pay. How much you can pay maximum? I can buy back 10,000 equity shares. Okay. How much will you pay for them? You need to pay them for buying back. How much will you pay? What is the maximum you can pay? You need to do 5,50,000 divided by number of shares. This is the maximum value I can buy back. This is the maximum number of shares I can buy back. So maximum price I can give them is 55 rupees. They may ask you, remember, I think one question we have for that also. I hope it is clear. They are online. Buyback, macha, their chances of buyback question out of 10 attempts or 8 attempts, there will be buyback question also. Agreed? Hello? Yes or no? Okay, next one. Money Plus Limited manages a mutual fund. The details of mutual fund is as follows. Value of invested security 7.5 crore. Cash and cash equivalents 1.5 crore. Accrued income 2.3 crore. Short term liability 10 lakh. Long term liability 1.2 crore. Accrued expense 5 lakh. Number of units outstanding 2 crores. X is holding 50,000 unit of this mutual fund. He got an offer from Y to purchase his entire holding at 110% of NAV. Determine the value of transaction that Y will pay to X. Understood the question? First, what you need to do? You need to first derive NAV. Now, what is NAV? NAV formula. What is NAV formula? You need to take market value of securities plus cash and cash equivalents plus accrued income minus short term, long term minus accrued expenses. Do all of this. See how much it will come. 7.5 crore plus 1.5 crore plus 2.3 crore. Short term liability, so 10 lakh minus 10 lakh minus 1.2 crore. Accrued expense minus 5 lakh. How much you will get? Now I'll tell you one thing. You can solve this question in two ways. One, you need to type 7 crore 50 lakh. If you do that, only numbers will not match. So how will you do? Whatever is in lakhs, convert it into 0.1 crore. What do you mean by that? Can I write 10 lakh as 0.1 crore? Can I write 5 lakh as 0.05 crore? Now convert lakh into all numbers. Now start taking, now do 7. Don't do 7.5 crore. Do 7.5 plus 1.5 plus 2.3 minus 0.1 minus 1.2 minus 0.05. How much you got?
1.95.
This question is to test your calculator abilities. Hello? If you take crore and do it, macha, it is gone only. Your calculator will start throwing error only to you. This is clear. Now I got net asset value. Now this is also in crores only, no? I don't mind. So do 9.95 divided by 2. 4.975 is my NAV. Now X is holding 50,000 units of this mutual fund. He got an offer from Y to purchase his entire holding at 110% of NAV. Now people, how much is 4.975? I mean, how much is the total investment I have made? 50,000 into 4.975 into what is the value that the other person is paying me? He is paying me 110%. I hope you understood why 110. I am getting some extra money. Do how much you will get? 2 lakh 73,625. Correct? Hello? I am telling Macha, 5 marks, who will give you in 2 minutes? But your analytical brain should work. If that works, then yes, everything is there. Pakka you will get. But easy only, no? That's why, see, the whole purpose of this is that only, no? If you knew, then you wouldn't have come today. Correct? Then what are we doing? We are doing that only. We are learning only. But my only thing is you need to keep this in mind. Correct? Yes. Okay. The result of assembly election of major state will be announced in next week. Banto. Options. Naresh, an investor, wants to take the opportunity only with limited risk as outcome of election result might be negative. Kamal, one of his friends, is regularly deals in option contracts. Kamal advised him to take position in following option contracts in PQR Limited. Assume the lot size is 100. Purchase one lot with 1 month put option. Purchase one lot with 1 month call option with a premium of 30 rupees with an exercise price of 550. First of all, you tell me, you want me to just to solve this option and go ahead, or you want me to explain what is option and then go ahead? Now, what is an option contract? Taka, I'll tell you. Taka, listen. In option, there are 2 types of contracts. One is called as call option. One is called as put option. What do you mean by call option? First of all, what is an option? Option is people, nothing but In your regular life also it happens. Imagine if you want to go and buy a house, buy a car. What will you do? You first give something called as token advance. Why token advance? You can pay the entire money upfront, right? Why are you paying that 5,000? Imagine if the value of the house is value of the car is 20 lakh. The token advance is 20,000. Where is 20 lakh? Where is 20,000? You can take entire money upfront. Why are you taking only 20,000? Because you would never know whether you want this car or you would want another car. So then why did you want to come here? You go outside only. But I have a fear. You call your Gen Z, FOMO. What is FOMO? Fear of missing out. Sir, what if I didn't like anything else? I'll go check all the cars. I'll again come back. What if this car is no longer there? So what I will tell the seller, sir, do one thing. I'll give you token advance. Please don't give your car to anyone else. If I don't find any other car, I'll come and buy your car. With that intention, you're giving the 20,000. Now, same cut, copy, paste will happen in option contract. One person, instead of selling a car, imagine he's selling you shares. Now, you have an option. What? Now, who is having an option we need to see. Meaning, seller can also have an option. Buyer can also have an option. If buyer is taking an option, what do you mean by an option? Whether if I want, I will buy the share from you. If I don't want, I will let the share go. I am taking a choice. It is my option. Who is having the option? In call option, always the option will be with the buyer. If buyer will come and say, now I saw all the cars. I will pay 20 lakh rupees to you. You give me the car. Seller has to give. In a call option, seller is having an obligation. If buyer says yes, seller has to sell. So that's why in a call option, buyer has an option, seller has an obligation. Is it clear? Now in put option, it is an opposite thing. What? Seller says, I want to sell my car. The buyer says, I want to buy. Seller will take a token advance. He will say, I will wait for 1 week. If I do not get a better deal, only then I will give it to you. So in a put option, remember, seller has an option. Buyer has an obligation. Clear? Hello? Pakka? Now, understanding this, let us try to understand what is the question. Agreed? Okay. Now see here. Now always remember, whenever I buy an option, I set that token advance, right? That token advance is always called as premium. Agreed? And always remember, whatever premium you have paid, you cannot adjust it. Meaning, sir, what is the value of the car? 20 lakh. What is the token advance you have paid? 20,000. Now, after 10 days, I'll come and say, I want to buy the car. You tell me what is the money I need to pay. I've already paid 20,000. Value of the car is how much? 20 lakh. So, what is the money I need to pay? 19 lakh 80,000. Allah, that is what I'm telling you. You can never adjust it. Premium is not adjusted in your final price. So, then why did we pay this? We are giving this. Why are we paying this? We are paying this because you are enjoying the right of saying yes or a no. What if buyer says after 10 days, I don't want to buy your car? He waited for you for 10 days. So the 20,000 is given to you for that waiting period. You have that option to say yes or a no. So for that option comes with a price. So premium is never adjustable. Hello. So on the last day of buying a car, I need to again give 20 lakh only. So remember, whatever the token advance you give is upfront a loss only to you. Hello? Are you understanding? Let us see one example and then go for a question. X went and purchased a call option from Y. What is a call option? They entered into a contract today. 100 shares of Infosys which will be settled after 30 days. So, sir, the share price, the premium that we paid is rupees 5. I paid rupees 5. Sir, and we agreed today that I will buy Infosys shares after 1 month for a price of, what is the agreed price? Agreed price means what, people? Whatever you have agreed today, that is called as strike price, exercise price, contracted price, any word they can use. So today we are agreeing, X and Y today they are agreeing, X is selling, after 1 month I will come and buy Infosys shares from you. How many shares? 100 shares. At what price? We are agreeing to buy it at 1000 rupees per share. Now you tell me, after 1 month, in the market price on today, 1 month is done. The market price, let us imagine two scenarios. Market price is 1200, market price is 800. There are two scenarios. Scenario number 1, scenario number 2. Now you tell me, in scenario number 1, what will X do? Will X go and buy shares from Y as per this contract, or X will go and buy the shares from the market? What will X do? First option, X will go and say to Y, I want to buy shares from you because we have agreed to buy the shares at 1000. It's contracted. Agreed? Yes. So I am going to exercise the option in the first scenario. Meaning I will say yes to Y. I will buy it. What is the total money that X will incur? I will exercise the option. What is the total money I incur? One is, people, 100 into 5 shares. That's my cost. 500 rupees. It's a cost for me. What is the profit you made? X strike price is 1000. Market price is 200. So what is the difference? 200 rupees is the profit you made. Into how many shares? 100. 200 into 100. How much? 20,000. What is the money you invested? 500 rupees to buy this option. Or else, did you have this option or no? So what is my total profit? My profit will be 19,500. This is how you need to calculate. Now you tell me option number 2. In the market, I am getting it at 800. As per the contract, I will get it at 1000. Will I exercise the option or I will let the option lapse? Lapse, because in the market, I am getting the options for a cheaper price. I am getting Infosys share at 800. I hope you are understanding what I am saying. In the market, I am getting the same share at 800. As per the contract, I need to buy it at 1000. Am I mad or what? So what will I do? Will I exercise or lapse? I will lapse the option. What is the net loss you would have incurred? Net loss is whatever 500 rupees you have paid. That is your net loss. Because you will not get that money back. I hope it is clear. Pakka, all of you, keeping this in mind, try to answer this question. How will you answer? Always try to write it in a format. The first one, I am writing option, type of option. Next one, lot size. Next one, I will write premium paid. Next one, what is the strike price or exercise price? Next one, write down what is the market price. Next one, write down the result. Next one, what is the profit or loss made? Even when you are doing it in the exam also, try to follow this format. Yes, sir. Now the first one, what is it they are telling you? The first one is 1 month call option with a premium of 30. Lot size 100, correct? The first one is call option. Lot size is 100. Premium is 30. Strike price is 550. Yeah? With an exercise price of 550. What is the market price? Market price means today. Meaning after the 30 days. Existing price means how much is that we need to check. Currently traded means when this is going on. Calculate the net payoff position of Naresh at the so that give you two scenarios. Imagine there is no change in price. Meaning currently it is 500. It is 500 only. So I will take my market price first scenario is 500. So result, you tell me, call option. I'm agreeing to buy with the person for 550 rupees. But market the shares are available at 500. Will I exercise the option or will I let the option lapse?
exercise 500 market price.
I will let the option lapse because in the market I am getting the shares at a cheaper price. You tell me what is the total loss that I have incurred? When you let the option lapse, answer should be very easy. Calculator ke kelsaane baralla. When you let the option lapse, the only loss you incur is lot into premium. This is my only loss. Nothing else will come. See, you will calculate everything only when you exercise the option. If you have not exercised, your loss is always simple. Remember, if you are letting the option lapse, my only cost is premium paid into number of shares. That's all, dead end. Clear? Okay. Next one, what they're telling you? With a premium of, okay, now they're telling you, what if it falls at 350? What will happen? Next one, same thing, right? Call 100. Premium is 30. Strike price is 550. Market price falls to 350. What will you do with the option? What will you do with the option? Lapse. What is the cost?
Same 3000.
Same. It will be negative 3000. Loss. Correct? Next one was put. Tell me the data. Taka. Put. Purchase one lot with one put option with a premium of rupees 5 with an exercise price of 450. Premium of 5. Exercise price is 450. One lot is 100. Premium of 5. Exercise price of 450.
So current price is 500.
So current price is option 1 is 500. Option 2 when it comes to 350. What will you do? Tell me.
Exercise matters.
Will you exercise the option or will you let the option lapse? First one. You will exercise it? Market price is 500. Strike price is 450. So you will exercise only, no? Of course only, no? Yes or no? Pakka only, no? Yes or no? Yes, people, you will let the option lapse.
Put option.
Logic, people, it's a put option. Why? In the contract, I can select at 450. In the market, I can select at 500. Put means what? An option to sell. As per the contract, I can select at 450. If in the market, I can select at 500. So definitely it will give me more money. Hello. So what is the net? What will I do with the contract? I will let the contract lapse. What is the net loss? 5 into 100. That's the only loss. So my net loss will be 500. Tell me, what is the next one? In the strike price is 450. Market price is 350. What will you do? So you will let the option. You let the option exercise or lapse?
So we are as per the contract we are getting 450. So the current market is 350.
ಲ್ಯಾಬ್ಸ್ ಪರ್ಚೇಸ್ ಏನಾ ಅವನು ಪರ್ಚೇಸ್ ಅಂತಿದ್ದಾನೆ ನೀನೇನೋ ಲ್ಯಾಬ್ಸ್ ಅಂತಿದ್ಯಾ ಡೇ ಪುಟ್ ಆಪ್ಷನ್ when the outside what do you mean put option is to sell, so I have a strike price of 450 and I have a market price of 350. Will I sell or not sell? I will sell, Lord. I will sell it for a profit. Now calculate. I will exercise. Tell me, now what is the net profit made? What is the profit made? You're exercising. So what is the profit made? Day. 350 minus 450. How much da? 100. How many shares da?
5.
Day. How many shares da? 100 into 100. 10,000. What is the total money you have invested? This is your cost only, no? Minus 100 into 5. That's always your cost only, no? So what is the total money you have invested? 500 you have invested. What is the total profit you make? You will make 9,500. Understood? But you need to see if they have asked you to calculate net. Can you see a net? So option, they are giving you in option 1. What is the total net loss? Total net profit. So take call also, take put also. In scenario 1, putting both of it together, what is your profit? Scenario 2, putting both together, profit or loss, you need to calculate together. Getting it? Hello? So see, they are asking you net only, no? Now see, why is this coming? Now imagine, how much is this? 9,500, Scenario 2, how much is the total cost? 3,000, 9,500 profit, 3,000 loss, 6,500, That's a total net in my second option. Agreed, that is what they would have done. Hello? Pakkana? Yes, Guru. Next one, RP Limited is planning to issue an IPO in 2019 for which a draft of a document is proposed to be filed in September 2019. The following data is available. Net tangible assets is 5, 16, 17, 8, 17, 18 is 7. Monetary assets of 1, 3, 3 crore. Net worth of 3, 4, 5 crore. Advise a company whether they can proceed with IPO. Will your answer be different if value of monetary assets is 4 crore and 16, 17? How will you deal with the situation if company has monetary assets of 5 crore in the year 17, 18? There are 3 questions. Technically, it cannot come directly as numerical, but I just felt it is a different question and I took it. This is nothing but people who is eligible for an IPO. 6, 1. You should have a minimum net tangible assets of 3 crore in each of the 3 preceding financial years. Correct? And that too, that what? Not more than 50% of assets should be in monetary assets. Correct? Not more than 50. Up to 50 is okay. So, in 16, 17, what is my total net tangible assets? 8. So, if my in 16, 17, if my monetary, in the first scenario, can I go for an IPO? Answer is yes. Second scenario, instead of 3, they are telling you what if it is 4? Can I go for an IPO? My net tangible assets is 8. My monetary assets is 4. Can I still go for an IPO? So remember, not exceeding 50%. 50 is okay. So if it is 4 crore, can I go for an IPO? Answer is yes, I can go. The third scenario, they're telling you, what if it is 5 crore? In 17, 18. 7 crore. What if it's 5 crore here? Can you go? Answer is no. Can you still go? Answer is yes, provided you have made firm arrangements for utilization of that monetary assets. If yes, you can go. I hope you remember. Online, no. But yes, easy question, done. Next one. What is the meaning of holding period return? Calculate the holding period return for an unit holder who bought a unit at 24.60 and received a dividend of 3 rupees per unit during the period. Face value of the unit is 10. Current unit price is 28.69. What is a holding period return? What is a formula? You should remember that easiest formula. What is the formula? Dividend plus current value minus purchase value divided by original value multiplied by 100. That's formula. No, 3 rupees is my dividend. What is the current value? 28.69. Current value, Noda. What is the purchase price?
24.60.
Divided by, what is the purchase price? Because you want return, it will be in percentage. You will get how much? They online or got it? Hello.
So 49.60.
ಎಷ್ಟಾ
49.8.
28.82.
Correcta? Done. Consider a mutual fund that manages a portfolio of securities worth 240 million. Suppose the fund owes 8 million to its investment advisors and owes another 2 million for wages, rent and other expenses. The fund has 5 million shares outstanding. What do you mean by NAV? Okay, direct theory. How NAV is calculated? What was the NAV of the fund? That is one thing that we need to know. What is the NAV? Easiest. How much? What is the NAV in this case? ಎಷ್ಟು ಅಲ್ಲ ಕೈಯಲ್ಲಿ ಮಾಡ್ಬೋದು ಕ್ಯಾಲ್ಕುಲೇಟರ್ ಬೇಡ ಚಿಲ್ಡ್ರೆ ಕ್ವೆಶನ್ ದೇ ಹ್ಯಾವ್ ಗಿವನ್ ವಾಟ್ ಇಸ್ NAV ಡೇ ಮೇ ಮಂತು ಅದಕ್ಕೆ ಮೇ ಬಿ ಅನ್ನೋದು ಡೇ 240 ಪ್ಲಸ್ suppose the fund owes 8 million. O means what? Should you get or should you give? You are getting, so mutual fund is getting money or giving money? Getting money. Okay. Hey, O means you are giving, O means sala, loan. I owe you money means what? I need to pay you money. Hakudrala land mine. Hey, so 240 minus 8 and minus 2. 234. This is my total assets divided by number of shares divided by 5. How much?
46.8.
46.8. ಇದನ್ನೆಲ್ಲ ಒಂದು 46.8 you got. Then you did not do something properly.
240 minus 8.
240 minus 8 minus 2. Play. ಆ ಕ್ಯಾಲ್ಕುಲೇಟರ್ ಮಾಡಲ್ಲ. Okay, next one. An investor buys shares in a mutual fund for 400. At the end of the year, the fund distributes a dividend of 11.20. And after the distribution, the net asset value of a share is 468.80. What would be the investor's return on the investment? How will you calculate? Just now we saw. How will you calculate return? Whatever is a dividend you have earned, 11.20 plus what is the current value? 468.80 minus what is my purchase value? 400 divided by 400 multiplied by 100 will give you holding percentage, basically yield or return. Done?
20%.
Next one. Grow More Fund has a size of 600 crore worth 600 crore with face value of each unit being rupees 10. The following information has been provided to you in respect of the fund. Particulars: market value of investment 720, receivables 9, accrued income 8, liabilities 5, accrued expenses 3. You're required to calculate NAV and you're also required to calculate if the front end load is 2%, calculate public offer price. Do. NAV is the easiest. How will you calculate? 720 plus 9 plus 8 minus 5 minus 3. How much? $729. That's my NAV. Divided by number of units. 1.215. Fundamentally, I tell you something you have done wrong. ಯಾಕೆ ಅಂತ? For a reason they give you value, they give you this. So what you need to do? You need to divide it by 60.
60, yes, sir.
They example this and all don't do 12.15. Correct? Now with this, tell me what is the purchase public offer price formula?
Sir,
NAV divided by
front end load.
front end load.
1 plus 1 minus
ಫ್ರಂಟ್ ಎಂಡ್ ಲೋಡ್ಗೆ 1 ಪ್ಲಸ್ ಬರುತ್ತೆ, ಬ್ಯಾಕ್ ಎಂಡ್ ಲೋಡ್ಗೆ 1 ಮೈನಸ್ ಬರುತ್ತೆ.
ಹೇಳಿ ನೀವೇ ಮಾಡಿ, ಟೆಲ್ ಮಿ ದ ವ್ಯಾಲ್ಯೂ ಟಕ. What is the NAV you got? 12.15.
So what is front end?
2%. They are online now. You also take some calculator and do something there. Simply watching some IPL highlights. ಮತ್ತೆ ಏನನ ಅಂದ್ರೆ ಸಾರ್ we didn't understand sir ಅನ್ನೋದು.
ಮೈನಸ್ ಬಂಗಾರ
1 minus front end load 12.40. Got it, huh? So how did you do? NAVA, my public offer prices, NAVA divided by 1 minus front end load. My NAVA I got a 12.15 divided by 1 because it is given in percentage. I need to convert it into a number. So it will be divided by 1 minus 0.02 will be my public offer price. It is nothing but 0.98. That is what you will get. Correct, huh? Next one, Fortune Mutual Fund launched a special scheme, the details of which are given below. NAV 14 per unit, redemption price 13.50 per unit, offer price 14.75 per unit. You are required to compute back end load, front end load. Start. You are having NAVA, you are also having redemption price. So what is the first thing you will calculate?
Maybe 100.
The easiest formula ulta ಮಾಡ್ರು. The current formula was what? Offer price is equal to NAV divided by 1 minus front end load. Correct? They are asking you what is front end load. Opposite ಮಾಡು. Offer price ಎಷ್ಟು 14.75. NAV ಎಷ್ಟು 14 divided by 1 minus x. Correct? Now take this x here. So 14.75 multiplied by 1 minus x. So ಎಷ್ಟಾಗುತ್ತೆ ಇದು is equal to 14. You solve this equation, you will get what is the value of the x. Try. They online or try da. They online or they online or where are you? Dana.
1.0.
See, front end 1.05 you got. Which one? How? 14.75 minus 14.75 x is equal to 14. Bring it this side. 0.75 14.75 x. 0.75 divided by 14.75. How much you will get? Hey, this 1 minus x, you did not get the equation. What will be this? 14.75 minus 14.75x is equal to 14. This will go this side. So minus 14.75x is equal to 0.75. Allah, it is easy alvena. Now what will be x? X is equal to 0.75 divided by 14.75. Correct? Into percentage. You are writing in value now. Multiplied into 100. Because when you took it in the formula, when it is 2%, you took it as 0.02. So when you have to convert it to percentage, you need to multiply it by 100. Now do same thing for back end load. You have everything. Correct, huh? What is back end load formula?
1 minus
Redemption price is equal to NAV divided by 1 plus back end load. Now I have NAV 14. I have my redemption price also given, no? This and all day, children question, 1 plus x, same thing, cross multiply. 13.5 plus 13.5x is equal to 14. 13.5x is equal to 0.5. 0.5 divided by 13.5x. When 0.5 divided by 13.5, x is equal to, you get something. See? 0.5 divided by 13.5. Done. Okay, see, good question. ABC Limited, a public company, has come with a public issue of 15 lakh equity shares. They are trying to come up with public issue of 15 lakh equity shares through book building process. The price band is 500 to 600. The following table shows the demand of securities at various price levels. What should be the cutoff price as per the book building mechanism? They have given you this. What should be the cutoff price? Just to see, I'll just get water. What should be the cutoff price?
ಸಾಲ್ವ್ ಮಾಡಿದ್ರೆ ತೋಪೆ ನಿಜವಾಗ್ಲೂ ಇಷ್ಟೊಂದು ಸ್ಟಾರ್ಟಿಂಗ್ ಕ್ವಶನ್ ಇಷ್ಟು ಈಸಿ ಆಪ್ಷನ್ಸ್
ಬಾಬಾ ಎನ್ಎವಿ ಕೂಡ ಈಸಿ ಇದೆ ನೋಡ್ತಾ ಹೋಗ್ತಾ ನಾವು ಆಪ್ಷನ್ಸ್ ಎನ್ಎವಿ ಈಸಿ ಡಿಲಿಸ್ಟಿಂಗ್ ಮುಂದೆ ಗುರು ಇವ್ಯಾಕು ಬಂತು
ಕಟ್ ಆಫ್ ಇದೆ ನಮಗೆ
ಏನು ಗೊತ್ತಿಲ್ಲ ಡಿಲಿಸ್ಟಿಂಗ್
ನಾನು ಗೊತ್ತಿಲ್ಲ ಸಿಂಗಲ್ ರೂಲ್
500 ಕೊಟ್ಟಿರಲ್ಲ ಬಿಟ್ ಪ್ರೈಸ್ 500 600 ಅಂತ ಪ್ರೈಸ್ ಬ್ಯಾಂಡ್ ಕೊಟ್ಟದ ಕೊಡದ
ಪ್ರೈಸ್ ಬ್ಯಾಂಡ್ ಕೊಟ್ಟವನೆ
ಹಿಂಗೆ
ಗುರಾಯಿಸಿದ್ರೆ ಆನ್ಸರ್ ಬರಲ್ವೋ?
ತೋಪೆ ಸರ್
Understood? Always remember, IPO and delisting works opposite. A company always, when it comes for an IPO, it wants more money. When a company is going for delisting, it wants to give less money. So when you are arranging the data, you need to arrange it from top to bottom. Because I want more money, first I will put 600. For 600, how many shares should I get demand for? 7 lakh, correct? So I will start arranging the data from increasing to decreasing order. Next at what? 595 we got. How much we got? 3 lakh? Correct? Hello? Pakana? So you need to arrange this data like this. Now listen. Now when I say people, a person who is willing to buy shares at 7 lakh, a person who is willing to buy shares at 600, he is also willing to buy the shares at 595. I told I will buy one share from you for 600 rupees. When I was ready to pay 600, won't I be ready to pay 595? Hello? Alva? Now sir, 590, 585, this list will go up. Now don't you think a person who is willing to pay 7 lakh, they will also be willing to take the shares at 595? So at 595, what will be the actual demand? It will be cumulative people. Meaning you need to add this plus this. A person who is willing to buy it at 600 and 595, don't you think they will be able to buy it at 590? So at 590, what is the demand? 1,40,000, huh? So, but technically you think at 590, how many people will be buying? It will be 10,50,000 plus 1,40,000. That will be 11,90,000. You understood? Hello. Now you see, next one is how much? 1,40,000. Next is 1,10,000. Next is 2 lakh. 11,90,000 plus 1,10,000 how much? 13 lakh. 13 lakh plus 2 lakh how much? 15 lakh. Again, correct? Now you tell me what price I will go for an IPO. What will be the final price? Oh no, yen sir, no put final price on where do I calculate andre? So people remembered at what price am I getting? What is my total IPO size? I am issuing 15 lakh shares. At what price I am getting 15 lakh shares? So if at all I am selling my shares at what is this? 575? If at 575 I am getting a demand for 15 lakh shares, so I will do my IPO at 575. Same thing opposite for delisting also. Delisting, you will arrange the table from 520 to 600. Again you will start adding data. This is IPO public offer. So the same thing will come for delisting also. Correct? 575. I give you same question for delisting as well. Yes? See, 550 to 620. Correct?
What price that is going for it?
600 sir. Bid price 600. Like 50 lakh. So 50 lakh.
Same thing. Here the question was, now what is the question? If you guys want to read, you read once. ABC Limited, whose equity shares are listed on stock exchange, they want to exit itself. It provides an exit opportunity to all public shareholders in accordance with SEBI delisting regulations. Calculate the minimum number of equity shares to be acquired for the delisting offer to be successful. Also determine the final offer price. The details are given here under. Promoter shareholding is 75%. Public shareholding is 25%. How many shares should they buy? The shares is 75,000. Public is 25,000. Total shares is 1 crore. How many shares should the promoters buy for the delisting to be successful? How many shares should they buy? You need to buy people. Remember, for your delisting to be successful, post delisting, the promoter shareholding should become 90%. Only then your delisting is successful. Now, before delisting, how much is promoter shareholding? 75%. So, how much should I buy more? I need to buy 15%. So, I need to buy people another 15 lakh shares. So, same thing again will repeat. They have given at what price, which data I got. Now, they have again calculated. Say 2 lakh 50. They have added this. Wherever I am getting 15 lakh shares, I will go and delist my particular company at 600. Got it? Pakkana? Hello? ಮಾಡಬೇಕು ಇನ್ನೂ ಮಾಡಬೇಕು ಮಾಡ್ತಾನೆ ಇರಬೇಕು. Financial data of a listed company Sunrise Limited as on 31st March 2021 is as follows. Equity share capital fully paid of face value 10 each. 5 lakh preference share capital fully paid of rupees 1 lakh. 12% debentures 2 lakh. Revaluation reserve, general reserve, P&L account. The company wants to place proposal before the board for buyback of its equity share and also simultaneously redeem the entire preference share capital. You as the company secretary advise the board on the following issues. Maximum limit up to which shareholders can approve buyback. Maximum number of shares that can be brought back and the maximum price that can be paid per equity share bought back. Generally, what should be the ratio of aggregate of secured and unsecured debts owed to the company after buyback? What is the first one? Maximum limit.
Share of 25%, 25% of paid share capital.
Maximum limit in amount. 25% of
20% equity share.
Paid up share capital plus free reserve.
paid up share capital plus free reserves. What is the maximum of post debt equity? 2:1. If at all you are any other type of companies, then subsidiary company, if at all NBFCs and all are there, for them it was 6:1. Okay, now calculate what is the maximum amount that you can pay. You got this question, how to do it? Try, give it a try. Equity share capital, how much total? Rupees 5 lakh. Okay. Preference?
1 lakh. 1 lakh.
Okay. Debentures ಬೇಕಾ ನಮಗೆ?
Debentures ಬೇಕಿಲ್ಲ sir.
Okay. Revaluation reserve ಬೇಕಾ? Revaluation reserve should I take? No. Reserve ನೋಡ 25% of paid up share capital plus free reserves. No. So should I take revaluation reserve or not?
General is not.
But revaluation reserve? Revaluation reserve, people remember, is not a actual reserve. It's a notional reserve. That money does not exist at all. So should you consider that? The answer is no. Leave it. General reserve, you need to take it. 2 lakh. P&L account, you will take it, P&L account will take it or no? Machas, please pray nicely to God and go to exam. Don't forget. Tell me, how much is the number?
9 lakhs.
9 lakh, that's the number, Is it?
So you have taken
Yado,
1 lakh, you have taken 1 lakh for that paid.
paid was how much?
2 lakhs.
Sorry. Total 10 lakh, Correct, Do 25%. You'll get how much? We'll have here only, wait. 2,50,000. So, now what is the maximum equity shares that you can buy back?
General reserve plus equity share. ಮಾತ್ರ add ಮಾಡೋದು.
Tell me what is the maximum number of shares you can buy back, equity. What is the maximum number of equity shares you will buy back? Equity will be how much, 5 lakh is the equity capital into 25%, no? If it is equity, I'll just take equity only, no? How much is it? 1 lakh? 25,000, no?
1 lakh.
Correct, no? That's number. What is the divided by 10, how much? 12,500, 12,500 shares I can buy back. What is the previous amount we got? 2,50,000. 2,50,000 amount I can buy back. Number of shares I can buy back is 12,500. What is the maximum amount I can pay? 20 rupees per share. Understood? This is how you calculate the maximum amount that can be paid per share per buyback. Hello. Totally option bantu. Or purchase the following European call option. What do you mean by European? The option, if it can be exercised only on the last date, is called as European. If it can be exercised any time, is called as American. European call option to MKey Tech Limited and European put option of GigaNet Limited. What decision you would take on expiry if the share price of MKey closed at 1,100 and GigaNet closed at 590 in the following circumstances? Ignore the premium paid. Lottery. So they're telling you what? If he would take on expiry if the share price of MKey closed at 1,100 and Giga closed at 590.
Market price.
So I've purchased 1,050 call option. It is market price is 1,100. Option contract is 1,050. Will I exercise or will I let the option lapse?
150 exercise market.
I'll exercise because my contract price is lesser than my market price. GigaNet 525 put, in the market it is 590. In the contract it is 525. Will I exercise or will I let the option lapse? Huh?
ಎಕ್ಸರ್ಸೈಸ್ ಮಾಡ್ತೀವಿ ಸರ್ ಯಾಕಂದ್ರೆ 590 ಅದು ಪುಟ್ ಆಪ್ಷನ್ ಸೊ 590 ಸೇಲ್ ಮಾಡಿ ಸೊ ಎಕ್ಸರ್ಸೈಸ್
I'll exercise, no. Of course, no. Obviously, no. ಇನ್ನು ನಾನು 5 ಜನ್ಮ ಎದ್ದೆ ಹೇ ಪ್ರಭು ಹೇ ಜಗನ್ನಾಥ್ ಪ್ರೇಮಾನಂದಿ ಏ ಕ್ಯಾ ಹುವಾ ಎಲ್ಲ ಹೇಳಾದ್ಮೇಲೆ ಇಫ್ ದಿಸ್ ಪರ್ಸನ್ ದೇ ಯಾರೋ ಅವನು ಪುಟ್ ಆಪ್ಷನ್ ಮಾರ್ಕೆಟ್ ಪ್ರೈಸ್ ಇಸ್ 590 contract price is 525. Will you let the option lapse or exercise? In the market I can select 590. In the contract I can select 525. Will I sell it to him or will I sell in the market? I will let the option lapse.
Market price 590. ಆಯ್ತಾ?
You will let the option lapse and you will sell it in the market.
ಅದೇ ಹೇಳೋದು ಎಕ್ಸರ್ಸೈಸ್ ಅಂತ ಹೇಳ್ತೀನಿ ಸರ್ ಅಷ್ಟೇ ಏನಿಲ್ಲ
No, I exercise they can answer. They are asking you whether you will exercise or lapse.
ಮಾರ್ಕೆಟ್ ಪ್ರೈಸ್ ಎಕ್ಸರ್ಸೈಸ್ ಮಾಡ್ತೀನಲ್ಲ ಸರ್
ನೀನು ಬರೀಬೇಕಾದ್ರೆ if you say exercise that means it is for the contract. The words has to be either exercise or lapse. Understood? MK 1120, market it is 1110, contract is 1120. Will you let the option lapse or exercise it?
ಎಕ್ಸರ್ಸೈಸ್ ಮಾಡ್ತೀವಿ ಸರ್
You'll exercise only, no? Of course, no. ಯಾವ ಊರು ನಿಮ್ದು ಮಾರ್ಕೆಟ್ ಅಲ್ಲಿ I get it for 1100. In the contract I'm getting it for 1120. In market it is 20 rupees cheaper. ಯಾವ್ದೋ ಇದು ಯಾಕ್ರೋ ಹಿಂಗ್ ಮಾಡ್ತಾ ಇದೀರಾ ಗೀಗಾನೆಟ್ 580
ಪುಟ್ ಆಪ್ಷನ್
put means sell da.
5
So you take it like this da. In the contract I can sell it for 580. Market I can sell it at 590. I will let the option lapse because I'll go and sell it in the market. Macha ಒಳ್ಳೆ I got it. This is old. I've taken this question from previous attempt, but I mean not previous means not this syllabus, old syllabus. Before that, 17 syllabus. But it is applicable for you because you also have inflation.
Oh, yes.
Consumer price and wholesale price index, correct? So M brought his morning coffee for 12 rupees in 2019, but now he is paying 16 in 2023. Calculate the inflation rate.
ಎರಡು ರೂಪಾಯಿ ರೈಸ್ ಆಗುತ್ತೆ
He is like, sir, 4 rupees ಜಾಸ್ತಿ. The inflation rate now, sir, 4 rupees has gone up. I'll go to one more coffee shop. I'll take it for lesser price only. Same like holding period return people. What is today's value? What is today's value? Today's coffee price is 16 rupees. What is the market price value that was that day? So how I'll do 16 minus 12 divided by original value into 100. அவ்வளவுதான்
0.33
into 100 33.33. Good, no? It was a 3-mark question. That's all. I'm telling you, in capital market there is no formulas as such. Your analytical brain has to work.
Okay, sir.
Okay, the following is the information pertaining to the portfolio of Dolex Mutual Fund. L&T 1,10,000 shares, current market value is 2685. Like that, they have given everything. The fund has not borrowed any money, but its accrued management fee with portfolio manager currently total 30 lakh. The total number of units outstanding is 10 lakh. So 10 crore 75 lakh 73,000. Compute the value of the portfolio and NAV. On the face of it, you tell me, is this a difficult question or easy question?
Seems like a different question.
On the scale of 10, on the difficulty, 10 is difficulty, I would say this is 2. I'll tell you how. See, what is that they're asking you? NAV will not change. What is that they're telling you? Mutual fund. What is the job of mutual fund? They have taken money from you. They're telling they have invested in all these securities. And they're asking you what is today's value. 1,10,000 into 2685.45. You will get one number. 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 Ultimately, this is the today's value of your portfolio. You got net assets. You have expenses given. Whatever this value is, minus 30 lakh divided by this is your NAV. That's all. Till today, they are directly giving you 7 crores. Somewhere they gave no mutual fund. Market value of investments. This addition they were only doing. Now they are asking you to do. 1% comfort zone ಅಷ್ಟೇ sir, they should give sir. Why should we do all the calculation? So see, 1 lakh 10 into they multiple everything they did. They got this value minus 30,000, 30 lakh, whatever they need to pay, divided by number of this, you will get NAV. Consider the following date of Sunshine India Mutual Fund. 2757 value of investment, receivable, accrued, liability, expenses, number of outstanding. You see in this pattern how many questions they have asked. Correct? Now see, there is one different change here. Value of investment is 2757, receivables 221, other current assets 643, liability 390, accrued expense 87. So you need to add these and you need to deduct these. Correct? Is a number of outstanding units. They are given 155 units. They are given you a different word called as sales charge. Hello.
Sir, total.
Try. What is that? They are asking you what would be the public offer price. You add everything. We will save some time there only. You add all that. How much you are getting it? 2757 plus 221 plus 643 minus 390 minus 87, correct? Divided by 155. Till now we have done this. We do not have any doubt here. NAV is that only, so it's 20.2383, correct? Public offer price. Sales charge here is nothing but they have given you front end load. Understood? Word is different. Pakana. Rest and all same, nothing will change. Redemption value ಅಂತ ಹಾಕಿರ್ತಾರೆ or redemption commission. Yes, next one. Uriverse Airline Limited, a listed company, is operating domestic and international flights from India. Recently, a news is flashing that virus might be affecting the entire world, and governments may advise people to stay at home till the situation improves. It is expected that share price will probably fall dramatically. To protect this, an investor has bought the put option. He purchased 3 months put, lot size is 100, with a strike price of 40 for 1 per share. Determine the investor's ending position if the price of the stock falls to 36 in 3 months. Do. Try.
The same like operations in the market.
Actually, this was a COVID question. That's why you are seeing the virus thing. Yes, tell me. Probably to protect this, an investor has bought the put option. First, that you open your eyes and say, he purchased 3 months put, lot size 100. So put lot size is 100. Strike price of rupees 40.
So market price 36.
Determine the investor's ending position if the price of stock fall to 36 in 3 months. Market price is 36.
Put option. Striking is 40.
You will miss some data. You solve. You will see. Easiest one,
No premium.
So 40 rupees.
Will you exercise or let the option lapse?
Exercise, sir.
only in exercise, sir.
I'll exercise because I can exercise at 40. In the market it is 36. So what is the net profit made? What is the net profit?
Oh, 400.
Hmm?
400.
400 only, no? How? 4 rupees into lot 100. So what is the total net profit made? 400 only, no? Pakka, no? I told you will miss one detail. What is that? Why? Where is the detail? Torsla?
100 lot size and
Allah Guru. Put a lot size 100 share with a strike price of 40 for 1 per share. 1 is premium. ಹೆಂಗೆ ಗೊತ್ತಲ್ಲ ಗೊತ್ತಲ್ಲ ಕ್ಯಾಪಿಟಲ್ ಮಾರ್ಕೆಟ್ ಸೆಕ್ಯೂರಿಟಿ ಇಲ್ಲ we know no we people that is how they build the question yeah. So my premium I have paid is 1 rupee per share, 100 shares, 100 into 1, so 400 minus 100 300 rupees I made profit. Done na? Mohan purchased 3-month call option for 100 shares in PQR Limited at a premium of 30 rupees per share with an exercise price of 550. He also purchased a 3-month put option for 100 shares of the same company at a premium of 10 per share with an exercise price of 500. Calculate the profit or loss that Mohan would make assuming that the market price falls to 400 at the end of 3 months. He has taken both. First write down what is that? Mohan has won a call option. Correct?
100 shares, 30% 300 contract rate. Market price is 580. Shares. Share with an example 550.
Sir, for the both options, the market price is 400 rupees.
For both?
For both the options, the market price is 400 rupees, sir.
You give it a try once.
Share raised to 80. So later provide ಅಲ್ಲ ಸರ್
ಏನು
ಅಲ್ಲ ಸರ್ ಪ್ರಾಬ್ಲಮ್ ಮಾಡೋದು ಏನಿಲ್ಲ ಪ್ರೀಮಿಯಂ ಏನಿಲ್ಲ ಅದ್ರ ಪುಟ್ ಆಫರ್ ಮಾಡ್ಬೋದು
Done. Hey, what? First call option. 3-month call option for 100 shares at a premium of 30 rupees per share. Premium is 30 with an exercise price of 550. He also purchased a 3 months put option. Put at a premium of 10. Exercise price of 500. Calculate the profit or loss assuming that the market price is 400. Tell me, call option, exercise price, contract we agreed to buy at 550, market is available at 400. Will I exercise or lapse?
ಸರ್ ಫಸ್ಟ್ ಕಾಲ್ ಆಪ್ಷನ್ ಲ್ಯಾಪ್ಸ್ ಮಾಡ್ತಾರೆ
I will let the option lapse because in the market it is available for a higher price. But what is the money I have incurred? 100 into 30. Premium is definitely gone, no? So the total money I have incurred there is 3000. Put option now. The what is that? Exercise price is 500. Market is 400. Will I exercise or will I let the option lapse? I will exercise. What is the net profit made? 100 rupees is a net profit made into what is the lot size? 100 only, yeah? Correct, huh?
Yes, sir.
100 only, no? 100 into 100, 10,000.
10,000.
10,000 premium paid 10 that is 100 into 10 1000 that is 9,000
Net profit.
correct here how much loss you made 3,000 no what is the total loss you made here they're asking you or what is the total profit you made the net gain is 6,000 correct hello taka Nirav attained the age of 18 years recently. He understands the concept of compounded return, thus started investing in systematic investment planning from his monthly pocket money for an amount of 5,000 rupees per month at the beginning of every month. The NAV of the scheme at the beginning of each month is, so every month he is doing a SIP. SIP means what? Every month you buy, no? Month 1, my NAV was, I bought at 10. Month 2, it became 10.50. It is increasing. Month 3, I got it at 10.8. Month 4, 11. Month 5, 11.30. The NAV at the end of 5th month is 12.10. What will be the value of holding of Nirav at the end of 5th month under this SIP plan? A beautiful question, in fact. Tell me. How will you calculate? How will you calculate?
He buys
Total SIP amount is investing. Total months, how many data they have given? They given us the data for 5 months, no? So month, we have 5,000 rupees being invested for 5 months, correct? When he has invested first time, what was the value of NAV? 10 rupees. Next one is
10.5.
10.5, 10.8, 11. 10.5, 10.8, 11 and
11.3.
11.30. So now try to do what is the number of units I get. Now I invested 5,000. Value is 10. Do 5,000 divided by 10. How much I get?
500.
Do for 5,000 divided by 10.5.
476.1.
476.19. Do 5,000 divided by 10.8.
462.9.
462.
So 462 3 ಹಾಕೋದಲ್ಲ ಸರ್ ಯಾಕಂದ್ರೆ 5
You will do 5,000 5,000 divided by 11.
So 454.5.
454. 5,000 divided by 11.3.
442.4.
4. Now add all this. 500 divided by 476.19. Do all that. Add all that. So you understood the logic, I invested 5,000 rupees at a different share price value. So the total number of shares, meaning units I have, is this much. How much?
2,336.16.
2003.
36.16.
This is the total units I have. Now they're asking what is the total value of my holdings, and they're telling us that the 5th month closing price was 12.10. I have total units is how much? 233. Closing price is how much? 12.10. So what is the total value?
28,000. Sorry, 2,82,675.
2,82,000 ಹೆಂಗೋ ಬರುತ್ತೆ.
28,267.56.
Submit correct Correct Beautiful question. Analytical. Okay, the last one. Tarun purchases the following European call options of TCS. He also purchased the following European put option of ACC. What decision he would take on expiry if TCS close at 835, ACC close at 565? Ignore the premium paid. So contract is 830, call option, market price is 835. Will I let the option lapse or exercise? Call option now.
Sir, call option lapse ಮಾಡ್ತೀನಿ.
Yes, you will exercise. Call option now. Market at 835. Here it is 830. I will exercise the option. Put 510 in the contract, market is 565. Will I exercise or lapse the contract?
So we'll lapse.
We will let the option lapse because market is trading at a higher price. TCS 840. In the market it is 835. Will I let the option lapse or exercise? I will let the option lapse because in the market I am getting it at a cheaper price. I am getting it in the contract at a higher price. I let the option lapse. ACC put 520. Market price is 565. Will I exercise or lapse? Put means an option to sell. In the contract I can sell at 520. In the market I can sell at 565. I will let the option lapse. Hello? Pakana? So these are some questions I was able to get it. Recently asked questions, and we have covered almost all the new syllabus past questions. Clear now? So if you still have any doubt, on the day of your exam, turn right side, whichever God you believe, on namaskara hakondu, go for your exam. Clear? Hello? So I hope we were able to quickly revise something, and I would suggest you watch this video. Do you want me to publish this on YouTube or? Okay, I'll tell the team to publish it, and I'll also tell the team to give you the link for this file. Download it. Happy learning. Make sure you guys are covering all the syllabus. Do not ignore numericals. Numericals play a very important role for you to score a good number. If you ignore this, scoring will become very difficult. Are you getting the point? Yes. So
can you tell the another word of this? You told for sales tax. What is for backend?
redemption commission, as the case may be. So that's it from my end today. I'll tell the team to upload also. So for all of you who were asking, I've done your numericals also, and then I don't know what else. I hope this should serve your purpose. So I'll be waiting for your results. Do let me know your results, how it goes and all of that. Let us be in touch. If it's good or bad, it's okay. But do let me know how did your exam go. Yep.
So what is that European call option and American?
European call option means, now imagine if we are giving a maturity period of 30 days. You can exercise it only on the 30th day.
Okay,
Last day. American option, you can exercise whenever you want in between. Yes, Kamesh, tell me, what is your doubt? What is your doubt? Tell me, Kamesh. In this, some have formats for CMSL. See, format as such, there is nothing. So you saw that the way I prepared one table. I will always suggest you guys to go for options and futures to go in the table format. Write down first option, write down premium, exercise, write down all that. Under that, write down the data. That is always more, preferable. Clear?
Can you explain about futures concerns?
Future is nothing but you will not have an option. It's a contract that you enter today to exercise a contract in the future, but without having an option. You have to mandatorily exercise it.
So will there be any end days?
Uh-huh.
Will there be any?
Yeah, it will be 6 months. Now after 6 months, you have to exercise the contract. So when you do not have an option, it's called as future. When you have an option, it is called as options.
So we cannot buy or sell at the current market price after 6 months.
You will buy it you will have to do it in the contracted price only. You will not have an option there. You have to buy. That's what is futures. In options, you will have an option. Correct? Sir, can you please explain European and American? I hope I explained that just now. European is nothing but option given. Now imagine if it's a 3-month option. You can only exercise it by the end of 3rd month. It's called as European option. If you can exercise it any time in between, it's called as an American option. Meaning even in the 2nd month also you can exercise it. It's called as American option. Sir, classes morning conduct ಮಾಡಿ please. Consider ಮಾಡ್ತೀವಿ guarantee. We'll see. If something goes good, yes, probably not immediately, but yes, we are definitely considering on it. We will definitely look into it. Then any other things that you guys wanted to? I would suggest you please watch marathon once. Everything again has been explained there, because there is that will not make sense again me telling you that this that again. It's a complete process has been explained there. Correct now? So make use of that as well. So if that's it, then we can wrap up for the day. Please do practice these once more. Values can change. Methodologies will remain the same. What I want you to understand here is, if this sum comes, you need to know that, okay, this is the way I need to solve this particular sum. That ideology should seep in here. You have to try to understand it here. Ready it down? Okay, that's it from today, people. Thank you so much. See you all. Bye-bye. You can end the live. Chalo, see you all.